Today we're going to be talking about keeping good records and the importance of doing that. This might not seem like the most intriguing topic, but it might save you a lot of taxes and a lot of headaches in the future with dealing with CRA. So first things first, the importance of keeping good mileage logs. Now your accountant might have been telling you this in years past and you might have been ignoring him, but now it's super important. And the reason for that is CRA has a national program where they're auditing mileage. And they're looking at mileage logs from 2016 and 17. And CRA is actually been pretty nice because in a lot of cases, taxpayers don't have 12 months of mileage logs. Instead, they're sending in 1 month or 3 month sample logs, and CRA is accepting these mileage claims. But the caveat is, in these letters, they're saying if we audit you again in the future, you need to have 12 months of logs. And often, these expenses that they're looking at can be pretty high, and the taxes are pretty high if you don't have good mileage logs. So from here on out, it's kind of a warning from CRA to start keeping good mileage logs. So really just write down everywhere you are driving for business purposes. And then at the year end, your accountant can tell you if that's personal or business for those kilometers. But again, CRA is being pretty nice right now, but in the future they're not going to be as nice. And the second reason is to do with this new income splitting rules, and you want to document what your spouse or adult child is doing in your business. So for example, let's say you're an electrician and you had a good year and you made $300,000 in a year. Instead of you just taking an entire $300,000 dividend and being in the highest tax bracket, what you could do before was maybe give your spouse 150 and yourself 150, so you're both in lower tax brackets, so it's a lower combined tax rate. But CRA is saying those dividends that are going to your spouse or adult child, they're being looked at now, and if they're unreasonable, then what happens is these dividends are taxed at the highest marginal tax rate. And one of the exceptions is if your adult child or spouse is involved in the business on average for 20 hours per week in that year. So what you need to show is you just show that your spouse or adult child is active in the business. So they're either collecting receipts, they're running different chores for you for your business. But you want to make sure that you actually have paper documentation to show CRA. So you actually want to show them, this week they did this, and this is the amount of hours that they worked. And there's a golden ticket that if your spouse or adult child has worked on average for 20 hours per week in the past 5 years, they get this golden ticket, so they never have to worry about TOSI again. They can get whatever dividends they want going into the future. And so you want to make sure that you keep that record and you keep it somewhere safe, because if CRA comes back in 5 years from now, you're not going to be remembering what your spouse was doing 5 years ago. So you want to make sure that in this year right now you're documenting what they're doing, or you can even say let's go back 2 years and kind of think up what they were doing and how many hours they're doing it. So make sure you're keeping good documentation for your mileage and also for what your spouse or adult child is doing in your business, so that they can maybe get around these new income splitting rules and get dividends themselves to achieve income splitting. So thank you very much and have yourself a good day.